This is Erica Simonavice with Tate Realtors, and I'm here with Miss Denise McCoy. And all I have heard lately is refinance, refinance, refinance. So now, if you guys are like me, what does that even mean? What is it? Is it the right time for you? What are we able to do at this point, and what's the best move for you? So now I have brought Denise here to help us out to answer some of those questions, as well as help understand if that's the right step for you or what might be a better one. So we're going to go into just a few questions, but first off, I'm going to have Miss Denise make her little introduction.
Well, I'm Denise McCoy. I'm a mortgage consultant for Tate Mortgage. I've been with Tate for 4 years now. I have a background, before I came to Tate, I have a background in mortgage operations. So that's what I brought to the table when I came to Tate.
So we definitely love that. And I know she doesn't want to age herself, but obviously she started with mortgage at the age of 3. So how many years have you been in it?
40 years.
Wow, that's awesome. So we are so thankful to have your wealth of knowledge today.
Thank you.
So we'll go right into it. Now, Denise, I'm hoping you can help to explain to me what exactly is a refinance.
When you refinance, you are simply replacing your current mortgage with a new mortgage. Sometimes you may want to include the closing cost when you refinance, so you would have enough money to pay off the current loan and pay the closing costs associated with the refinance. So basically, you're just replacing one mortgage with another one.
Okay. Now, there's got to be some advantages to that, because right now it kind of seems like you're just starting over at zero.
It depends on how long you've had your current mortgage, but there are some real advantages to refinancing, especially now with rates so low. The most common reason for refinancing is to lower the rate and possibly the term of your current mortgage. So we just look at that. We look at what you have now. We look at what the current rates are and make a determination that this is the right thing for you to do, and you need to do it now before rates go back up. But another advantage would be to pull equity out of your home. You may want to do some home improvements. You may want to consolidate debt. You may have a lot of high interest rate credit card debt, personal loans that you may want to take care of. You may have an equity line against your house. Typically, those are adjustable rates, and some have balloon payments on them. So you may want to look at refinancing while rates are low to take care of that equity line, so you're not faced with that large sum of money to come up with all at one time when that balloon payment comes due. If you're in an adjustable rate mortgage right now, you may want to look at refinancing into a lower interest rate fixed rate loan. So you don't have to deal with the moving interest rates, because we never know what's going to happen with those. But those are some of the advantages of refinancing.
Okay, well, that definitely sounds good. Now, I mean, with rates being at such a different point from even a year ago, even 6 months ago now, will it really make a difference in someone's payment?
Yes, I am currently working on the loan, and I did their purchase at the end of 2019. Their interest rate was 5 1/8%. I'm refinancing them at 2.875, and the difference in their monthly payment is $171 per month.
Wow,
that's a big difference.
Huge difference from only a year ago. Less than.
It is.
Wow.
Yes, it can make a difference.
Which I'm sure it's not always quite so significant, but
no, that's the largest difference in payment that I've had so far. Typically, they're around $100 a month is what I'm seeing. That's a typical savings.
Well, I mean, I definitely would love $100 in my pocket. Well, okay. So now we've talked about some of the advantages. What may be a disadvantage of this?
A disadvantage may be the time that it's going to take you to recoup the cost of the refinance. We determine this by taking the cost, the closing cost, and dividing that number by your savings, your monthly savings for the refinance. For example, if you have $4,000 in closing cost and your savings is $100 per month, it's going to take you 40 months to recoup the full cost of that refinance. If you're planning on staying in your home for a length of time, if you're going to be there, say, for the next 10, 15, 20 years or so, it probably would not be a disadvantage. But if you're looking at possibly selling your home in the next 3 to 5 years, we need to take a hard look at that, because you're really not going to have a lot of time to recoup that cost to see that benefit.
Sounds good. Now, we kind of brushed on this a little bit, but it sounds like there's different types.
There are the two most common types of refinances are the rate term, which is just lowering your interest rate and possibly lowering the term of your mortgage. The other type is the cash out, which involves pulling the equity from your house. You can pull up to 75% of the equity in your home, and that's used, of course, like we talked about earlier, to make home improvements, consolidate debts, do things of that nature with it.
Great. And then I'm 100% positive there are costs associated with this. Can you walk through some of those?
There are. You basically have the same cost on a refinance that you had when you purchased your house. There are lender fees. We have an $875 flat fee. We do not charge an origination fee, so there's that additional 1% that sometimes you see, or 0.5%. We just have the one flat fee. Then, of course, you're going to have the cost of the appraisal, the attorney fees, the credit report, title insurance. The closing attorney will reissue on your current title insurance policy, so that premium would be less than what it was initially. But then you have recording fees. So there are fees associated with the refinance. Now, there's one larger sum of money that's collected. It's not actually a cost. It's not actually a fee, but that's the money we have to collect to set up your new escrow account. Right now, with this time of the year, property taxes are coming due, starting usually in September through the end of the year. So the money that we're collecting to set up the new escrow account is larger at this time of the year. But keep in mind, though, that once we pay off your current loan, you're going to get a refund of all the money that is sitting in your current escrow account. So you're going to immediately see that money back in your pocket. So that's why we take that into consideration when we're looking at the time it's going to take you to recoup the funds, because part of that you're going to immediately get back.
Perfect. And then for those of you who don't know, those escrow funds are just held every month. So when those big payments like your insurance and your taxes come due every year, every 6 months, they have the money in that account in order to pay them. So just a quick little thing. And then as far as when you start this, what does the process entail?
Initially, a phone call or an email. Just get in touch with me. Let's look at your situation. Let's look at what your current interest rate is. What's your needs? Are you needing to pull equity out to do some of the things that we talked about before? Let's just compare and have that discussion. And if it looks like it is going to benefit you to refinance, the next step would be to fill out an application for the new mortgage loan. We have a great online application. It's on my website. You can go to it, and the link will be there, or I can email you the link after we've had our conversation. On that website, you can also upload all of the required documents, such as pay stubs and W-2s, bank account information. You can even pull in your bank account information if your bank is participating in that through our website. We would need those documents. We need your current mortgage statement and some of the information on your current mortgage, but you can upload those. But if you just don't have a comfort level with doing anything online, I can take your application over the phone, and we'll work out a different way of getting that documentation to me. We can meet in person if you want to do that. With the COVID-19 restrictions, makes it a little bit more difficult at this point in time, but I will arrange to do that if you need to meet in person with me. So that would be your next step. Then once all that has been submitted to me, I send it to my processor, and she cleans it up, makes it pretty for underwriting. And during this time, we've ordered your appraisal, so we're waiting on that to come in so we can determine the value of your home. And then it's submitted to underwriting, and they do their review and issue your approval. It may have some conditions on it. We may have to get some more documentation from you, but once that's done, we submit it back. They issue the final approval. We move forward to closing, and your loan package is sent to the attorney, and you go in and you're signing your documents there. Now, there's one difference with refinance that you didn't, one more step that you didn't have when you purchased your home, and that's there is a mandatory 3-day rescission period after you sign your documents. We need to make sure that you have a full understanding of what you're doing. You're giving your home as collateral for a new loan. And depending on the need, you may be borrowing more money than you did when you purchased the home. So we need to make sure that you're comfortable with your decision. You've reviewed all the information. And once the 3 days are up and you decide, yes, this is what I want to do, the funds are dispersed. We send the payoff for your current mortgage to your current lender, and we set up your new loan for you to start making payments on your new mortgage.
Perfect. Wonderful. And then if for whatever reason someone's looking at maybe not being in the house for too long, or maybe not refinancing just really just doesn't make sense for them, I'm assuming you go through that as well and kind of determine what their next steps are.
We do. We do that. If they're looking to buy, we start prepping them to purchase a new home. We start looking at their assets. Do they need to save some more money? Are there some little credit issues that they may need to work on? We start looking at that because we are a very active purchase lender. We do a lot of purchases, and our rates are very competitive as well as our fees. And just a little extra right now, we are offering a $500 purchase bonus special. And that $500 is credited to you when you purchase your home and at the closing table. And it helps to pay the closing cost. Now, if you have negotiated for the seller to pay your closing cost, and that $500 is really not needed, what do we do with it? We buy down your rate. I've had two that's happened with. And so now you've benefited from the seller paying all of your closing costs, and you have a lower rate than what we anticipated in the beginning. So it's a win-win situation for the buyer.
Perfect. So now it sounds like the best thing that anyone can do that's starting to think about refinancing is really just reach out. And now Denise is licensed in both South Carolina and North Carolina. There's other lenders who are qualified in other states. For my family that's in the Midwest, I'm sure you guys are enjoying your summer. It's a little hot down here. But we can definitely get you hooked up with the best people in those states to be able to help you. So feel free to reach out. I'll have Denise's information in the comments below, and then feel free to reach out to me if you have any questions as well. If refinancing isn't a good option and you're looking at potentially selling in a little bit, we probably want to get started on that to see if there's anything you might want to do to your home to get that top dollar so you can move forward into wherever you want to go. So feel free to reach out if you have any questions for either of us. We are here for you. And then thank you so much for being with us today. We do
Thank you for asking me.
Thank you. Well, you have a wonderful day, as well as everyone else who has decided to stop on their lovely Wednesday to watch us. Bye.
Bye.